Good morning and welcome to Stock Market Today. It's Wednesday, August 7th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. And we'll give a special thanks to the team at See It Market for posting our work every day, as well as to the team at StockCharts.com for hosting this show every morning in the 9:15 time slot. So U.S. equities closed higher in Tuesday's trading. S&P 500 breaking a 6-day losing streak. Tech and financials outperformed, while energy was the only group to finish lower on the day. Treasuries were mixed with some curve flattening. Dollar was stronger on the yen cross, also higher against the euro. Gold finished up 0.5%, adding to recent strength, and WTI crude settled down 1.9%. So outperformers, tech, fins, industrials, and discretionary. Underperformers, energy, materials, staples, REITs, and healthcare. It's interesting to note that the S&P futures were sold off pretty aggressively on Monday night after the U.S. labeled China a currency manipulator. But then the market staged a huge rebound yesterday after China set its currency at a stronger reference rate than had been feared. Just going to let that sink in a little bit. Kind of ironic. Anyway, S&P futures are up 30 basis points to get things going here this morning. Asian equities were mixed overnight. European markets are trading to the upside. Treasuries are rallying across the curve with help from negative yields in Europe. The German 10-year bond yield is near negative 0.6%. Dollar is weaker against the yen, but stronger against the euro. Gold is up more than 1%. And WTI crude is falling through to the downside, down about 0.5%. Here's the market. We have a bounce from the 62% retracement level that we've been highlighting. Support now in the 2,800 to 2,850 zone. And you can see we've been bouncing top end of that support, getting a little bit of stabilization now. Resistance is in the area between 2,900 and 2,950. Remember, old support becomes new resistance. We're watching the character of RSI for clues. What does that mean? Remember how I talk about in an uptrend, RSI stays above 50 or above 40. In a downtrend, it stays below 60. Well, we've now become oversold and bounced back a bit. If you're bullish, if you believe that we're going to hold 2850 right now and snap back and continue to run higher, you would expect RSI to quickly retake the 50 level and stay there. If the market starts to trade at 2,900 or tries to fill this gap between 2,900 and 2,915, and the RSI cannot shift, cannot get much above 60, that tells you that momentum has shifted and that the rally is likely to fail and you want to think about raising cash. So we're watching the character of RSI for clues. I know everybody kind of likes a hard and fast buy them, sell them. Sometimes it's more nuanced than that. And I'm never going to be the person to tell you just buy them and sell them if that's not my highest conviction call. Right now, I think we could be in for some choppiness. Right now, I think we're in a wait-and-see approach. Right now, I want to see how the market reacts as it retests broken support. And in particular, I want to watch what RSI does at those levels. Chaikin money flow still bullish, so the indicator picture is mixed. Your market in a minute now. What are we writing about? Stocks stage a rally on turnaround Tuesday as China sets its currency at a stronger level than feared. We hit on those already. Sentiment indicators move toward fear, but I would point out we're not at either egregious level just yet that would warrant a contrarian opinion. I'm taking a look at comm services today because I think they have the right mix of offense and defense within that group after their reconstitution last year. Futures point to a higher open here today, as we said. So let's take a look at the power bars. All but the small caps are still skewed bearishly. 10-3 bears to bulls for the Dow, which was up 1.25%. S&P 500 adds 1.4%, 127 to 71. Bears to bulls. NASDAQ inline performer 3117 bears to bulls. Small cap underperformed again. 380 bulls, 367 bears. Big rally in bonds and yields lower. Interesting to note, though, that financials were strong as rates fell. Now, a lot of that could be the insurance companies, but it's just kind of interesting that financials. Remember last week we started talking about financials and how they were seeing improved relative strength, even in the face of declining rates. Just something to keep an eye on. 13 bullish or very bullish stocks, 6 bearish or very bearish stocks, according to the Chaikin Power Bar. Small cap stocks remain somewhat more bullish than large cap stocks, and major markets are mixed. Heading over now to the stock of the day, Cigna, health insurance company. 163.72 close yesterday, up 2.97% for very bullish Cigna. Rating is very bullish due to attractive financial metrics, very strong earnings performance, and very positive expert activity. Stock also has weak price volume activity, however. But the 20 factors, 5 in each of these 4 categories, gives us the very bullish rating. Strong trend, strong industry group, type of name we want to consider. But what do we immediately see? Very bullish rating met with underperformance. Stock is massively oversold, but money flow is bearish. And long-term trend line, not really where we want to see it. Now, if you were thinking about it, if you were trying to be subjective with the charts, if you will, and look for reasons to buy Cigna, that's human nature. But hit the drop down. Checklist pretty much tells you that it's a mixed bag at best, with 3 of the components weak. 3 strong, 3 weak. My guess is, in a choppy environment for the market, there are probably better names out there to own and better setups. Keep an eye on Cigna. Don't waste the opportunity. Put it on a bullish watch list and then monitor it. When these change, you have a more compelling entry. Look at the sector tracker now. Movement of the major sectors over the last 5 days. Utilities only grouped to be higher over the last 5 days, but the top of the list still has that defensive feel to it. REITs, healthcare, and staples round out the top 4, and communication services, which we're featuring today, does have defensive components to it, right? Names like AT&T and Verizon in there. Financials, discretionary, and materials, middle of the road. Trade-sensitive groups, industrials, and tech towards the bottom, and energy. I kind of feel like energy is like small caps now, right? I've been saying the same thing for so long. The trends remain in place. I almost want to start looking for opportunities. I'm not going to, but it's almost to the point where you want to see if maybe there's something there. Obviously, we're going to stick to the process. Small caps still underperforming. We're going to avoid them. Energy still a mess. We're going to avoid it. But it's just the contrarian in me wants to take a look, but we're still going to follow the process. It's really just some kind of just thinking out loud here. Industry focus today, insurance services. Over the past 6 months, has outperformed the S&P 500 by a little over 2%. Power bar ratio, which measures future potential, very strong. 17 bullish or very bullish stocks, only 4 bearish or very bearish stocks. Currently number 2 of 21 subsectors. This is a group where we've been a table pounding bull. We've been highlighting insurance stocks for a while. So just like the trends down here in energy have been in mess for a while, the trends in insurance have been strong for a while. Take a look at names like First American Financial, very bullish rating. Take a look at Hartford, HIG, very bullish rating. And take a look at Allstate, also with a very bullish Chaikin power gauge rating. As a matter of fact, let's take a look at Hartford here today. Very bullish stock, strong trend, strong industry group. Outperforming the market, closer to oversold than to overbought, bullish money flow above a rising long-term trend line. Look at this now. Remember Cigna? 3 green, 3 red. How about 5 green, neutral, overbought, oversold, but that's because it's not below 30. If you were going to take a look at an insurance name, wouldn't you rather own Hartford, HIG, than Cigna, CI, as you're doing your work? The checklist makes that pretty clear. Great new tool that we've added to Chaikin Analytics. Taking a look at what's trending now. Yesterday's S&P 500 gainers and losers, our movers and shakers. TransDigm, TDG, earnings sent the stock higher by 13.5%. Take 2, nearly 8% on earnings. Zotis, ZTS, 7.5% plus on earnings. CLAC, KLAC, KLA 10 Core, 7.25%. And the semis are holding up. Go back and read my note from yesterday where we highlight the SOX and we highlight Micron. Semis are holding up. Data point, hold on to it. Newell, earnings send the stock higher by 4.7%. On the loser side, International Flavors and Foods down 16% on earnings. Mosaic, earnings sent the stock to a 52-week low. Mylan continues to pull back since the Pfizer deal. Cardinal Health and ABC trading lower on talks of a settlement as it relates to the opioid epidemic. Those stocks down by more than 5% on the day. Taking a look at our earnings now. Remember what I said. We have the macro. but we still have the micro in play. Disney missed by 41 cents, stock trading lower by 3% here this morning. There's that TransDigm. They beat yesterday by 62 cents, stock trading higher in the pre-market. Regeneron, REGN, beats by 69 cents. Duke, DUK, Duke Energy, beats by 14 cents. And there's your Zotis print. They beat by 8 cents. And we saw that stock traded higher yesterday. After the close today, CTL was a bullish stock that's going to report. CNP, CVS, and NRG are neutral stocks before the open. Names of interest after the close, Monster, Skyworks for the chips, AIG for energy. After the close, bearish stocks, Fox A and MRO. Chaikin advises caution when holding bearish stocks ahead of earnings. Let's dive in now. Let's dive into the charts. Sentiment day on Wednesday in my notes, Chaikin Analytics clients. And what we're looking at here is the CBOE options equity put call ratio. And you can see the big spike higher as investors have been gravitating towards puts as the market has trended lower. Now, we're not at an extreme here. You know, basically readings above 75 tend to coincide with near-term lows. You get close to that 75 mark, 0.75. You get readings. This is a moving average, by the way. It's a 13-period moving average of the CBOE put-call ratio to smooth out the data. And spikes above 0.75 tend to coincide with near-term lows. We're not saying we have to get there now. What I'm saying is we're not at an extreme that would warrant taking a contrarian opinion at this time. Sentiment has moved towards fear, though. VIX has spiked. CNN Fear Greed Index has moved to a reading of 27 and is in a position of fear. So you do have a little bit of a sentiment tailwind if you want to continue to be bullish here and see, could push the market back up to the underside of broken support near 2,900. And there's a gap fill up to 2,915. So just something to keep in mind from a sentiment perspective. We talked about comm services today in our note. And comm services is interesting to me because, as I said, it kind of provides the opportunity to play offense and defense in the market. Why is that? Well, after being reconstituted last year, comm services went from a stodgy, holder of AT&T and, names like Verizon and Viacom and the traditional utilities that you think of as defensive, the communication utility companies that you think is defensive. And they added in names like Take-Two and Twitter and Activision and Google and even CTL, which is reporting after the close tonight. So still maintains some of those defensive properties, but then also adds in some of those digital media names that could provide some juice. So I think comm services is interesting in this environment as the market's choppy, as it's trying to find a level. We don't know yet if we're going to be able to retake broken support. So in an environment like that, I think, looking at XLC for just broad exposure makes sense because it gives you exposure to both offense and defense in this market. So let's take a look at the chart. Testing support at a rising trend line and a breakout level above the 200-day moving average. Notice what happened here. Notice during the sell-off, did not become oversold. Remember, we looked at the chart of the S&P 500. XLC did not become oversold. And on a relative basis, XLC relative to SPY, we have a breakout of this consolidation. Kind of looks interesting to me. If you want to look for individual names to own, you can start to drill down on the holdings and see which ones are bullish or very bullish, right? I'll tell you right now, the names that are bullish are CenturyLink, Google, AT&T, Activision, and CBS. Those are the bullish names that are holdings currently bullish, that are holdings within this fund. And then we'll wrap it up with a stock idea, Kirkland Lake. I've been bullish on gold in my market survival guide, highlighting GLD for broad exposure and selectively highlighting names, most recently Barrick, GOLD. Well, today in my notes, Chaikin Analytics clients, we're highlighting Kirkland Lake, KL. Bullish stock, outperforming the market. Overbought, oversold indicator rounding higher after just barely becoming oversold. Chaikin money flow bullish above the rising long-term trend line, which acted as support after the earnings announcement and a quick rebound towards all-time highs. Take a look at Kirkland. That's going to wrap it up for today. Daily stock ideas for free, ChaikinAnalytics.com/today. I'll be back here tomorrow. Have a great day, everyone.